Good day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 8th of July, 2019, getting on to 4:45 in the afternoon. A down day in the stock market. Metal market's pretty much unchanged, and I would call the dollar slightly higher at the expense of a number of currencies. And even with Iran taking off and saying, oh, I'm going for uranium enrichment, I'm going to approach 5%, the market just yawned at it. The problem going on for Iran is pretty simple. They're only doing several 100,000 barrels a day of oil today. If they shut off the Straits of Hormuz, the remaining friends they have in India, China, Russia, what will be the reaction to them not being able to get the oil they need for their countries? This becomes a game of pressure on them to get them to the point of, number one, negotiations, number two, stopping terrorism. That's how I'm reading what goes on there. It's not against the Iranian people. This is probably more a government thing. I would assume the people are feeling plenty of pressure and they would like this to end. In looking at the S&P 500 index, well, we're down 12 for the day. Okay, you're just off the all-time high, so big deal. But the real event this week that's going to impact this market is we get the two-day testimony of Fed Chair Powell Wednesday and Thursday in front of Congress. And he's going to be drilled, especially on Wednesday. That's where the big questions come in. Why was the Fed talking in February of raising interest rates, and here we are in July, and the market is pricing in a huge percentage bet that the market is going to see the Fed cut interest rates come this at the end of the month. The FOMC meetings, I think, July 31st. Wow, that's going to be pretty interesting talk. And it's going to impact this market because let's not forget, this is a market that was near the 2740 level. It's up rather dramatically up to the 3000 level all since June. I mean, this has been a dramatic price rise. The market has had a pattern of higher lows, higher highs. It had no major correction to speak of. If you really look at the market, it's continued to have the higher high, higher low pattern since this low in June. And look at the reaction. You would not understand why that just took off that way on you. We then look to see where key moving averages are because analysts look at them. If all you need to do is turn on Fox, turn on Bloomberg, you're going to see the analysts always talking, them CNBC included. And the reason is to give you an idea of what the trade is centering on. There are certain indicators that people like more than others. That does not mean they're any more accurate to me or less accurate, but I want to be with the herd. You might not want to be, but that Maryland Chad, when those bulls were charging down the street, if you stand in their way, the idea is you get hurt. That's the idea of that. I don't see galloping bears going down the street. When I look at the higher low, higher high pattern, it gets taken out if you break out 29.58.50, which would lead me to think that that's when the correction or the pause in this level of the bull market would end, because it would stop that pattern of higher lows, higher highs. When I look at where the market's been at, it's already hit the upper Bollinger Band. I teach and continue to believe that when you get to the upper Bollinger Band, especially in a market that's not coming out of a sideways pattern. A sideways pattern I treat different. But the first times you hit it, it's a pretty big resistance zone. And yeah, I admit, this was the first time you hit it right there. And that day it was a 29.78, and it's a bit higher than that right now. It's a 29.78.5. I know it doesn't look like that, but it is. So it's still in that general area where I think the pros took some money off the table. And I'm getting bothered by this, the momentum. When the market reopens tonight, you might lose that embedded reading. Now, intraday doesn't matter to me if you lose it as much as losing it on a closing basis. If this gets lost and the red line turns back under 80, what happens is my work says that price and the 18-day average are likely to be making a run at each other. In other words, plain English, a price break. Now, we've been jumping in this moving average about 5 points a day, as you can see recently. Okay, so that would put that up around the 29.45 level, which is still under that 29.58.50 to break that pattern. When I take a look at the NASDAQ and I look at what it's done, it tonight lost the ability to embed. It was close. It had Coming into today, if we look, both numbers were not over 80. They were over 80 on Wednesday. They were on Friday. If you get my written market reports, I wrote today and I said, you don't embed that often. So I would be careful. This is likely to not do it. That's what happened. Doesn't mean you can't go higher, but you've lost that ability to change the market from overbought. It's now just overbought. Overbought condition, hit the upper Bollinger Band. It's backing off, might be headed back to this 18-day average to see what it wants to do in front of the Fed speech. The SEP Dow, support back at the 18-day average. If we look here at the reading, both numbers were over 80 today on the close, both over 80 on Friday, and both over 80 on Wednesday. Thursday was July 4th. So you have that reading, but you closed at the low of the day, and you're just barely over that number. The odds favor, if you're steady to lower, you're not going to keep that embedded reading tonight. So the day that you embed, one of the things I always look at is where did you finish that day off? Did you just embed or did you do it on a solid basis? Right now, I still say until you get the red line under 80, the bulls have control. But if that closes under 80, in fact, just getting under 80 will be a warning sign that price and the 18-day average are likely to be trying to make a run at each other. In the Russell, you never did that. You're just plain overbought. Any reading over 70 in the slow stochastics, I consider overbought. The trend is higher lows, higher highs. It had one run where it spent 2 days hitting the upper Bollinger Band, hasn't looked back, and it's not a sideways pattern. So these have been resistance points. So were these. You went back to the 18-day average, back up to the resistance. Is the market not in an uptrend in all these indices? Don't get me wrong. It is. I'm not arguing that point. But when you're using futures and you get all that leverage during the day, you have to be thinking short term as well. Otherwise, you're best off using something that doesn't have the leverage of futures. In the VIX, I still contend that the pros were writing puts on the first challenge of the Bollinger Band right here. Wouldn't surprise me at all. I would think they'd want to get out if you get up to that 18-day average. If you look here and you wrote them, you're back to those averages. I can carry you on this numerous times. It's a play that I noticed years ago. And it doesn't mean that you bank the house on it. I mean, writing a put or writing a call when you hit a Bollinger Band is fraught with risk. I don't know how else to say it, because naked writing means you have, in theory, unlimited risk. Now, the difference here is when you're writing them and you're at 12, 10, 8, whatever they got down to, the idea of getting down to that zero number is pretty hard. I'm not saying it can't happen, everything in life. I remember, this brings to mind, I had a customer that told me, you could not see interest rates go under zero. I remember having this fight. He was a great customer, and I kept saying, that's not true, not true, and he's trying to tell me they went under zero. And by the way, today I was on Bloomberg in Canada talking about that. How many interest rates around the world are under zero? You do realize about 40% of the developed countries around the world have an interest rate that is under 1% on a 10-year note. Hard to believe. What if I tell you a lot of Europe has negative on 10 years? You know that already. All right, so I would look for the resistance there. In the bond market, you're back to a support zone. You're back at the 18-day average. You've negated the uptrend. You have a higher high, lower low pattern, momentum pointing down. It would make sense to me that these markets get fairly neutral in front of what? In front of Fed Chair Powell on Wednesday talking to Congress in the morning. I wouldn't be surprised to see TLT get back to that 18-day average. The pattern is up. Again, the first times you're hitting this upper Bollinger Band, it's still resistance points. In the dollar index, this has caught the market in something it wasn't looking for. And now the question is the market, what does Fed Chair say come Wednesday about the jobs data? What does he say about the other economic data? And traders are going to hang on every word, trying to get an edge for what the Fed's going to do at the FOMC meeting at the end of the month. In the eurocurrency, you've been in a straight down decline since the near 115 level. And now the question is, if the U.S. backs off and starts cutting interest rates, has this market gotten too cheap? If the U.S. holds firm, Do we crack through the 112 area? Those are the two ways I'm looking at it. In the British pound, you've hit the lower Bollinger Band. Each time you've done that coming out of this type of action, you've had a bounce. I'd be a little nervous. But sideways action, as I said earlier, has its own uniqueness, and this is very much sideways action. If it decides to lock in and just hang at this, then we got to see if the Bollinger Band can eventually embed. Right now, it just oversold, and I contend that last Friday, I think the pros took money off the table. In the end, you have a pattern of a higher high, lower low. This is another market that's going to be majorly impacted by what the Fed chair says and how the market interprets what he says. In Bitcoin, Bitcoin today got a big piece of news. Both the SEC and FINRA came out and they put down guidelines to be a registered cryptocurrency broker. Very important. We haven't had that. That's the first step in registration, the game cleaning up, if you will. I read what the rules are, and they're so obvious. You got to keep the firm's money separate from the client's money. Duh. Why would you put your money in these crypto exchanges that they're betting their own money and yours is in that pool? I don't get it. There's got to be more to it because there's been so many hacks of these different websites that I didn't read it all, but the fact that they are getting a set of guidelines, that's bullish, not bearish for this market as I interpret it. The pattern here has been one of lower highs recently, lower lows. It came down, hit that line in the sand, that 18-day average, and has gone flat from there. If the market interprets the news as I'm interpreting it, well, maybe the market gets back up to that 1400 level. In Brent versus WTI crude, the market is realizing that as much as Iran boasts, talks, there's a limitation to what they can do, and this is called a stranglehold. This is a country that used to put out 2.5 million barrels a day. As I'm reading it, they're 300, 500,000 barrels a day. That tanker that got taken last week, they just had the inspection near Gibraltar. It is full of crude. So there were rumors it wasn't. It is, according to the latest news reports. Market is still shrinking the differential here. The pattern is one of a higher high, lower low, which is not a trend. Supports back at the 18-day average, but as I said, the market's had a nice run up. Now it seems to be stalling. And with that bullish piece of news today, Iran breaking away from everything, breaking its treaty with the EU, giving everybody 60 more days before it kicks up more enrichment. Who are they kidding? They're starving. They better figure out a way to negotiate. In WTI versus the other, and just looking at WTI, you peaked out up here, you pulled back, supports back here. The problem has been one of perceived demand around the world for oil, period. With slowdown in world economies, what do? There was a great story today, I think it was Reuters, that talked about China's brand new refineries and how they are, one just opened, it's doing 400,000 barrels a day, and it lowered its prices against those so-called teapot refineries in other parts of China by a lot, grabbing market share, and there's another 400,000 barrel a day refinery coming on board. What's the demand for all that? That's going to be the question. The pattern in gasoline, though, turned lower highs, lower lows. It's over the 18-day average. Therefore, you have an upside bias, but you got the swing line down. What I'm watching is right here, the slow stochastics. Right now, both numbers are over 80. Both numbers were over 80 on Friday, and both numbers over it on Thursday. So you have 3 days in a row of that. If you lose the red line over 80 tomorrow, it puts into play that price and the 100-day average, since it's closest average, may make a run at each other. To get this thing going to the upside, I think you got to take out Friday's high and negate that small downtrend that's set in place off the swing line. In nat gas, what do I say often when you hit that first challenge of an upper Bollinger Band or the lower? That's where I think pros take money off the table, and that's just what happened. I talk about this in great detail, by the way, in my morning subscriber video. If you haven't learned about it, go to our website at www.iraepstein.com. Go under research or education to that subscriber video area. Read about it, because that's where I set the traders up in the morning talking 6 in the morning for the day's trade. That's when I typically have either my recording out or I start recording it. One of the tools I use, and I do show it sometimes in the morning subscriber video, is the formula of pivot points. Because sideways markets, especially sideways markets, have an affinity for traders trying to go in and out of them. And what it does is the formula sets up points on the chart: resistance 1, resistance 2, support 1, support 2. I used to call it sale 1, sale 2, support 1, and then I'd say the support and the other support points. Let me give you the idea here, because my words are twisted there. You're looking to see if getting up here in price might offer an opportunity for a sale to get back down here, or getting down to the first support offers an opportunity to buy it and get out higher. What I do is I teach it with the idea of momentum, because I think adding the momentum to it gives you a leg up on the regular tool itself. So I'm looking here to see if the market losing its upside momentum and coming down. Well, if it were at the sell point, that gives me a lot of confidence. If the market comes down like over here, this low point on here, and it were at a buy point, gives me an idea of confidence. It's for in and out trading. It is not for position trading, and it's for exiting a market. It's another good tool, in my opinion, to put into your library of tools. That's simple. How do you find out more about it? Well, it's really simple. Just give us a call at 866-973-2077. It's a 3-part video series. We'll send you the link to it. You can also go to our website, sign up for it there. We'll email you the link for it that way too. And if you're on the website, choose anything else you might want. You can also click up here at any point. It'll take you there. Sorry for being so lengthy today, but I had a lot to say because sideways action brings that out in me. I'm Ira Epstein. Have a good day.